Ladies and gentlemen, good day, and welcome to the Nath Biogene's Q2 FY23 earnings conference call, hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Ms. Monali Jain from Go India Advisors. Thank you, and over to you, ma'am.
Thank you, Inda. Good morning, everyone, and welcome to Nath Biogene's Limited earnings call to discuss the Q2 and H1 FY23 results. We have on the call Mr. Satish Kagliwal, Managing Director, and Mr. Devendra Khurana, Chief Financial Officer. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risks that company faces. May I now request Mr. Kagliwal to take us through the company's business outlook and financial highlights, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Monali. Good morning, ladies and gentlemen. Thank you for joining us today for this earnings call. Friends, after a challenging last year, the first half of this year has been promising. Despite erratic monsoon this year, there is a general excitement in the farming community. This is also supported by a strong price environment, and we are confident of a good Rabi season ahead. At Nath Biogenes, our highest priority has been providing our farmers with the best quality seeds, which have been developed through our stringent R&D and which provide these farmers with not only significant pest protection but also deliver the highest yield. For the last few years, we have several products in pipeline, and some of these are now in commercial production and sales. The performance of these products has surpassed our expectations on practically every front, and they are by far one of the best performing seeds in their respective segments. We introduced multiple products in different segments in all important cotton crops. These products have been liked by the farmers for excellent yield and high level of resistance to sucking pests. For example, Concall, one of the finest in its category, has been recognized by Government of India for its consistent performance through multiple All India coordinated trials. Our strategy of diversifying and strengthening our product portfolio in various crops and segments is also yielding good results. In the vegetable arena, our shift from conventional breeding to biotech integrated crop development platform has resulted in development of revolutionary products. For example, our tomato hybrids with multiple virus tolerance have witnessed strong traction and great liking by the farmers. These are just a few of our success stories. The idea is to build a robust pipeline of exceptional products and use a well-invested pan-India distribution network for sales and distribution of these products to our farmer friends. Our portfolio of diversified products will take the company to a high growth trajectory and will also provide us with good opportunities in overseas markets. Friends, I will now hand over to Mr. Khurana to take you through the quarterly performance. Thank you.
Thank you, sir. Thank you, Mr. Kagliwal. Good morning, ladies and gentlemen, and thank you for joining us today for our earnings Concall. I would also like to introduce and welcome Dr. Venkatesh Kulkarni, who is in the call, our Research and Development Chief, Mr. Amol Gupta, our AGM Finance and Accounts, and Mr. Dheeraj Rathi, our Company Secretary. As Mr. Kagliwal mentioned, we have had a good first half. I will discuss the results in detail. In operational highlights, our stated strategy of non-paddy, non-cotton continues to deliver strong results our portfolio continues to get diversified, leading to de-risking. The non-paddy, non-cotton segment, that is field crops, vegetable and supplement, saw an 18% growth on YOY basis in H1 FY23. This was largely driven by strong performance in vegetable and other field crops. Vegetable continues to be our key product portfolio, and we are very happy with our product basket. During the first half, this segment saw a gigantic volume growth of almost 3 times and a massive value growth of almost 4 times. Our focus on this area has been hybrid tomatoes, chili, okra and goats. One of our hybrid tomato seed, more popularly known as Akhand, is seeing strong traction in the market, and we expect good growth from this product in the coming years. In field crop, Bajra was another star performer. This segment saw 64% increase in quantity and 74% increase in value. In this particular segment, our fodder Bajra is also seeing a strong pull in the market and is growing at a fast pace. Paddy. The performance was slightly below par, primarily because of our emphasis being shifted on hybrid paddy from research paddy, where we expect strong movement with better margins. This segment is undergoing a transition and should be stabilized from next year onwards. Cotton. The performance is also better than expected, and despite the issue of illegal cotton, we have still been largely able to maintain volumes and values. Going forward, our model portfolio would continue to focus on non-cotton and non-paddy crops to ensure a balanced portfolio. Kindly note that we are not reducing our focus on cotton or paddy, but enhancing the focus on other field crops and vegetables. Coming to the financial performance, top line, if we look at quarterly performance, then we have a strong growth of around 45%, largely driven by the strong performance of the vegetable segment. The H1 performance is also ahead of the last year performance and clocked at 231 crores. The EBITDA and net profit are down on H1 basis. The reason being, during H1 last year, we had made a provision of 19% as a scheme credit to be passed to the trade. However, due to changing market conditions, the actual trade credit went up to almost 26% by the year end of last year. Accordingly, we have provided 26% trade credit in H1. Please note that the trade credit is the backbone of the business, and this ensures consistency of sales. Our gross contribution margin continues to remain at 50% plus, and we are confident to maintain these in coming times also. Rather, we are hoping to improve on this based on the change in product mix. We continue to maintain a positive cash flow, which is a healthy sign for working capital controls. Our working capital is also regularly improving, and our banking lines are fully supporting the company. We continue to remain long-term debt-free company, and we will be maintaining that status. In guidance, we have already achieved more than 83% of our last year revenue, and given the strong outlook of Rabi season, we are confident of achieving a top line of around 15 to 20%. Our EBITDA and net profit margin should be around 15 to 14% respectively. With that, I would now like to open the house for questions, please. Thank you.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Any participant who has a question may enter star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Yogesh Tiwari from Arihant Capital. Please go ahead.
Thank you, sir. My first question is regarding the BT cotton hybrid Sanket.
Sorry to interrupt. Mr. Tiwari, we can't hear you very well. If you can use a handset and speak, sir.
Yes. Yeah. Am I clear now?
Yes, sir. Thank you.
Yes. So my first question is basically on the BT cotton hybrid Sanket, which we launched, wherein we are looking to have market share of 20%. So can you give us, if you can give some background about what would be the competition and current market share, and what would be the margins on this product? If some background on what is the opportunity over here.
I would request Mr. Kagliwal to kindly please take it up.
Yeah. A very interesting question. The competition is from the segment of Sanket, which is medium bole segment of cotton, and this is sold all over the country. Almost 50% of the cotton is medium bole segment, and Sanket happens to be a little late maturity, so again the segment will be a little shorter. The competition continues to be from practically all the industry solvers. So we are competing with them. The Sanket is performing better than all the competition. And the question about margin. So margin will continue to be the same as they are in any other cotton hybrid, because we are constrained by the price control by Government of India as far as BT cotton sales are concerned. So we hope to have increase in cotton selling prices this year also, as was done last year. But we are constrained by the margin. So margins are a little less in cotton sales as usual since last 2 years, ever since this cotton price control has come in. So have I answered all your queries, Mr. Tiwari?
Yeah. That is helpful, sir. And the other thing is on the competition which was there from illegal BT cotton. In the last quarter, it was like there was some reduction in the competition. So how is the situation now?
Illegal BT cotton continues to be there, and there is hardly any control on it. It looks to be self-dying for one reason, at least, so that the performance of illegal BT is not guaranteed by the supplier, because it's not regulated, or quality certification is not done. It's just illegal. So wherever performance is good, it will continue to grow, but there are several places where the performance is very bad, resulting into people probably getting dislike towards illegal BT. That's a self-decline, suicidal kind of a thing. But hopefully there is some check, because we have now products like Sanket which are competing and giving better results than even illegal BT, which was basically for controlling pink bollworm. Pink bollworm was they are claiming pink bollworm control, but Sanket also has a mechanism of escaping pink bollworm. So that's probably will be a lot of positive for us.
Yeah, sure. So it was like about 2 quarters ago, this illegal BT cotton, it was taking away market share from organized players. So is it the situation similar, or it's like things are reversed, like organized players are taking more market share?
No. Illegal continues to take market share from organized sector only. So cotton sales are by all the organized sector, and illegal was eating away and taking share from the organized sector only.
Yeah, but
so that is a minute which is there, but hopefully it will shrink, because there are better products available in organized sector which are giving competition to their illegal BT also.
Yeah, so just want to understand if they were taking market share earlier from the organized sector. Has that increased now, or has that decreased, taking away the market share? What is
last
the trend?
season? The estimate was it increased. It increased.
It has increased now.
Yeah, the season for cotton is always June, July. So last June, July, the estimate was that it has increased.
Okay, and what would be
marginally.
the approximate market share for this approximately illegal cotton market share?
So the approximate estimation is 15 to 17%.
Okay, sure. And sir, anything our company is looking at exports, any opportunity in the export markets, and what is this market on the export market?
I think Dr. Kulkarni can answer.
Yeah.
Yes. Good morning. I would like to say that we are happy that we are expanding to North Africa and Central Asia, wherein our vegetables are performing very well. We are also putting our cotton for licensing there, and that licensing is going on. However, our vegetable sales has been very good in the region. We have also done some sorghum in North Africa. It is performing well, and we are likely to build a volume of it.
Sure. And we also have this product.
Hello.
Hello. Yeah.
Hello, please. Yeah.
Yeah. So we had launched this product, Vinci Win, as a plant regulator. So what is the performance of that product, and what would be the growth potential for this?
It's in the market, in Indian market or in overseas market?
Dr. Indian market only. We are talking
Indian
about
market.
Indian market.
Yes, Indian market.
Sir, आप बोलेंगे sir?
Okay.
Mr. Tiwari, this product has tremendous potential because this gives it's a booster. I mean, it gives a boost to the farm productivity. It enhances productivity, it enhances quality of fruit and quality, size of the fruit and everything. So tremendous potential is there, and is doing very well. We launched this product more than 2 decades ago, and is growing every year. So it is useful for practically all the crops and across the geography.
And what would be the market share of this product? If
there is no, I would say this PGRs, there is no documentation to know what is the real market size, because there are several players, small and big. So I would hasten to add that I will not be able to tell you what is it. I can only say it's very, very small market share that we have currently.
Okay, and how is the industry? What would be the growth rate for the industry, PGR industry?
About 15 to 20%.
Annual growth rate, 15-20.
Yeah.
Okay. And sir, what would be your product mix between Rabi and Kharif?
Okay. In Kharif, we have practically major crops: cotton, jawar, bajra, maize. Then we also have paddy, right? And in Rabi, majorly it is mustard and wheat, supported by maize and paddy in certain parts of the country. So Rabi is majorly wheat and mustard, supported by maize and paddy, and Kharif majorly is cotton and all the cereals.
So what would be the percentage product mix? How much of your product in terms of percentage would be towards?
Okay, I think let me handle that. See, normally all seed industries who are Kharif specific, their 70-75% of the top line comes in Kharif, that is in H1. And Rabi, it goes down by about 30%, right? I had made a statement in the same forum a few years back that we are trying to balance this Kharif and Rabi portfolio, because vegetables take a major share in the second half, and Vincivin or other supplements that we are introducing take a major share in the second half. If we are able to give an impetus to the growth of vegetables as well as Vincivin, then we will have a balanced. Last year we were floating around 60-40. This year, I don't know, because it will depend upon the Rabi sales obviously, but our aim down the line is to bring it to 55-45 to start with, and subsequently 50-50 in Kharif and Rabi, basically because this will keep the cash boxes turning on month-to-month basis.
Okay. And how do you see the season coming up? We had this excess rain in North India and flooding. So do you see any impact on demand, and how do you see the Rabi season?
I will try to answer that, Mr. Tiwari. I think you have really studied questions very well. This continued rains, especially in Bihar and UP, is affecting the planting of harvesting of paddy and planting of mustard. So it's getting late. But there is no choice but to plant mustard by several farmers. So then they of course have a choice of planting wheat, but given the economics, people will still try to go for mustard. So there may be some impact on mustard. So mustard may have a little bit of a setback, but wheat will take a booster. So there will be a balancing with that, wheat and mustard balancing. So this delayed rains is definitely affecting paddy harvesting as well as the sowing of mustards. We are hoping that by this month end, mustard sowing will pick up and also be substantially high by this month end. By this month end.
Okay, but has the season started slowly?
Yeah, already started. Actually, the season is in full swing wherever the rains are stopping. This full swing, right? Rajasthan, some part of Western UP, is full swing. Only sure. Bihar and UP, where the rains are incessant, is getting delayed.
Sure, sir. And just last one question on the financial. So if I look at gross margin, just wanted to understand, in one half gross margin is about 52%, but Q2 is about 77%. So why is Q2 so high in terms of gross margin?
Tiwari, I have been requesting the analysts and investor community that they should only look at our results on H2H basis.
Okay.
As long as, okay, but let me answer your question, okay? When it comes to our declaration of quarterly results, we have lot of provisioning to cater for.
Okay.
Because top line has gone, the invoices have been made, sales returns are still coming in. So Q1 and Q3 are basically results with provisions. Whereas Q2 and Q4, that is H1 and H2, these are already fully audited, provisioned, sales returns booked, all expenses taken in. So as a result, the comparison becomes much better. That is one. Secondly, as far as our gross margins are concerned, I call it as a contribution margin. We have been maintaining 50 plus, 51, 52, 53. We are still trying to improve that by changing a product mix so that I get better margin on hybrid in paddy and so on. So we will continue to maintain that. We are hopeful that we will continue to maintain that.
Sure. So that is very helpful, and that's all from my side. Happy Diwali to the entire team. Thank you, sir.
Oh, very good. Thank you.
Thank you. Our next question is from the line of Pratik Prajapati from Anand Rathi Shares and Stock. Please go ahead.
Good morning, management. Pratik this side, and I have a few set of questions. So we can see in the presentation that we have launched a few products in the cotton, bajra, and vegetables, and it seems like they are gaining a good momentum in the market. So can you please throw some more lights on those, especially on Sanket? And what is the current revenue contribution from the Sanket to the cotton portfolio? And what kind of growth and the revenue are we expecting going forward?
Let me answer you on that. Firstly, the products which have been put into the presentation are only few of the star products that we expect will be doing better than other products in the same segment. Okay. So they have not been launched. They are in the process. They are launched. They are put into the market for sales. As regards their potential is concerned, we feel that they are going to be our star leaders. This year, if you ask me for the contribution of these products, it is not something which can be very good, because the other products which are already into the market are better than these products in sales, because they are established and they are already there in the market for some long time. Sanket was introduced last year. This year it has shown a fantastic potential. Coming years, if this product performs the way it is told that or supposed to perform, then this may become our leader in our cotton sales. I have a sale of around 11 lakh packets only. In that, Sanket may be the major contributor. Similarly, for Super 27 in Bajra, and similarly for tomato sales in Akhand. Today, we are not putting a figure on how much they are selling, but if they actually become the leaders in their own particular segment in the company's performance, definitely that question will be financially answered.
Okay, well enough. And due to the Sanket, can we see the improvement in the margin for overall cotton segment?
This question was answered by Mr. Kagliwal. He said that the margins are restricted by the government.
Okay.
So the margins in cotton cannot be improved because you have a fantastic product, because the government puts a cap on the top line. But because the product is better, it can always create inroads into other companies or other products.
Fair enough. And the last question, so what is the outlook on the cotton for the next year, and what kind of growth we are expecting in cotton?
We are talking of industry growth, or we are talking of company growth?
Industry's growth.
Sir, would you like to please answer?
Yeah. Industry. See, there is a positive traction for cotton growing as of now, and which hopefully will continue till the sowing season next Kharif, that is June 23. So we expect an increase in cotton area going forward next year. As of now, the increase can be 5 to 10%. This is basically because of the good prices the farmers are realizing for the first time. Almost 100 rupees a kg is the cotton rate, which was never thought of, never expected by any farmer. So we hope that area and the cotton will go up by 5 to 10%.
Okay. Fair enough.
Thank you.
That was my last question, and happy Diwali to all the management.
Thank you very much.
Thank you. We'll take our next question from the line of Ramakrishna Neti from Zen Wealth Management Services. Please go ahead.
Hi, good morning, and thank you for the opportunity. A couple of questions from my side. So just if you can help understand, broadly in terms of the various R&D initiatives that you have been working on internally to scale up your product base. I mean, that is one thing at a broader level. And second thing is, your presentation says that last 4 years, the selling price of vegetables actually has gone up multifold. So trying to understand what are the driving factors, and the background why I am asking this question is, given this kind of scenario, is there any risk that, like what government has been doing on the cotton front, is there any risk that government might consider putting a price cap on vegetable prices also, given the kind of steep uptick that is being seen in the sales price? Third question is, so I'm new to the company, so sorry if I'm actually asking this. So what is the reason for the low tax rate? It's 3%, 4%. So what is the reason for that? Thank you.
Doctor, would you please answer the initiatives on research and development? Then I will take up.
Yes. Thanks for this question. As a research and development, we have first strengthened our line development and product development portfolios. In our first basic part is that we have shifted all our processes from conventional breeding to biotic integrated crop development, wherein we use advanced tools like DNA markers, etc. After that, the testing capabilities should be enhanced was one of our main aims, because hotspot locations, disease resistance, etc. have to be made. So we made our product development and testing very, very strong. In that process, we are not only getting the good products like Akhanda, Concall or Super Style, we are also getting wonderful products in molecular marker-assisted rices and also tomatoes extra. So this is paving the way. As initially told by Khurana-ji, that when we have our 2 years or 3 years of cycle, the products are getting great traction because of these changes that we have made. We have introduced the 6-stage gate product development process, which we are adhering it to very strictly on that. Thanks to management, they have strengthened this whole department wherein the failures are very there. And this also gives us an opportunity to build volume as well as value, because we know the value of the products.
Any new products that you will be launching in the next 3 years kind of a thing? And what will be R&D as percentage of overall sales on an average?
This is a wonderful question. Actually, we had 3 sessions of dream product mix. Thanks to our managing director who has actually initiated this. We created a product status and product mix. In that, we are going to give late maturing rice hybrid, which is our one of the priority, which also gets good value. We are also one of the products that we are going to launch, and which is first product we have launched. Again, second product we are going to introduce is in powder bajra. Third one is in very high resistance of okra. Then in cotton, we are coming up with at least 3 products to cater the needs of all the segments. In mustard, we will be one of the pioneers we are actually leaders in yellow mustard. We are going to do a gentian mustard also. These are that. Whenever I am saying each segment, it is not simply 1 product or 2 products. Actually, we are focusing on building a very strong pipeline. For example, Sanket has been released. Next, we have already got ready. We are already testing. So our focus is in that new platform. It's not only delivering, but what is next is also the answer to the management. This is what we are taking on from our field.
And as far as your question on the expense on R&D was concerned, which was linked to the first question, we spend around 10 crores every year on research and development. And percentage-wise, you can calculate it differently, because when the sales were low, it was around 5%. Now it is around 3.5%. So between 3 to 5% is what is our target on research every year after year, and we are getting good results because of that. Okay. Second, you asked me regarding the slide on seed to value ratio. This was the first time I attempted this slide in presentation for the investing community. I dug out the data between 2018 and 2022. And I found that in 2018, if the field crop was 38 crores, the sales was only 3,000 metric tons, so it gave me an average of 120 rupees per kg. The same in 22 has gone up to 211 rupees per kg. In vegetable, a similar comparison has taken the price of 480 rupees per kg in 2018 to 982 rupees per kg in 2022. Now this can be attributed to products with better margins. Even if the quantums go down and the values go up, we are getting a better product, a better product mix, and a better value for the seed. Lastly, you asked a question on the low tax rate. Although this has been touched earlier quite many times, let me do it again for you. Please note that the company is an agriculture company, and we are doing our sales on agriculture land. All production takes place on agriculture land, so under Section 10 of the Income Tax Act, it becomes an agriculture income. Because it is an agriculture income, it tends to become tax-free. Yet, the company pays around 1 to 2 crores of tax every year. That is because apart from our agriculture production, we also have trading products like Vinchivin, certain vegetables get imported. So these are our trading incomes. So on the trading income, whatever profits I get, I have to pay the tax. That is the reason for the low tax rate of the company.
Sir, thank you for the explanation. Can I ask one more question related to your vegetable sales price? So just one clarification.
Hello.
Yeah. So this you are talking about this per kg. This is a packet level in terms of the seeds packet level. That is the price increase.
No. I have not gone into the details. Okay, let me say vegetable was 15 crores in 2018 with 319 metric tons. Okay.
Acha. Okay.
And now I am getting 29 crores with only 293 metric tons.
Fair enough. Understood. Thank you.
Okay.
Thank you. We'll take a next question from the line of Guneet Singh from CCIPL. Please go ahead.
Hi, sir. I just have one question, and it's a query again regarding the tax rate. So, under the IT Act, the company is exempted from any taxation if the company has its own land and all the activities are in the domain of agricultural activities. But I see that competitors like JK Agri or even Kaveri Seeds now, government has demanded to pay tax. And in fact, JK Agri or a couple of other competitors, they pay taxes of about 25%. So just to understand, why is the tax rate low despite competitors paying higher tax? Is it because we own the land, or I just would like to understand.
Let me answer you by taking your question in two different aspects. Okay. Firstly, your intuition or your contention that if the company has land and then only it becomes an agricultural produce is misplaced. Kindly go through Section 10 of the Income Tax Act. It also says that the leasehold land is also treated as a land on which production taken is agriculture income. Okay?
Right.
Okay. So in that case, the company has almost about 30,000 acres of leasehold land across the country on which we take up our own production. And because that production belongs to the company, it is done by the company, it makes it available for agriculture produce and agriculture income. Okay? This is point number one. You are trying to compare this company with JK and other companies. Please understand, every company has its own accounting standards, its own account principles for agriculture income. We have been going on this route for site since 2011. We have been cleared by even appellate in income tax that this is an agriculture income. So I think we are good.
All right. Thank you.
Thank you. A reminder to our participants, if you wish to ask a question, you may press star and 1. Our next question is from the line of Niket Dhruv from Gruber Systems. Please go ahead.
Namaste, Kagliwal ji. Namaste, management.
नमस्ते जी नमस्ते.
सर मेरा एक सवाल ये है कि मुझे लगता है कि कोई भी कंपनी जो होती है वो इधर इट इज बड़ी होने के कारण मतलब बड़ी जब भी होती है जब देयर इज अनसर्टेनिटी या दैट काइंड ऑफ जियोपॉलिटिक्स which happens, which gives rise to an opportunity in this crisis. तो जैसे मैं पढ़ता रहता हूँ अभी अपन देखें तो what is happening around the world is in case of palm oil, I think last few months before few months the supply of palm oil was completely stopped by the producing countries like Indonesia, who corner I suppose they corner around 60 to 70 production of the world. Same thing happened with Russia and Ukraine. So वहाँ से अपने को sunflower it stopped and the prices doubled. So my as per my observation goes, there has to be in same things with protective things would continue in 2023 and things like that. So I was also reading an article where Indian government is very keen on starting palm oil production in India, and where I suppose India out of the 100% oil product consumption, 50% is almost palm oil.
Mr. Singh, can we come to your question, please?
Yeah, sorry. Yeah. So my question is, sir, do we how do we strategize with the production, the product in the pipeline? Do we have I mean, is there any way we can strategize where forward-looking products which we can include in our product mix?
Yeah. You see, we are into absolutely essential crops for the country. We are into all the major crops, all essential crops. Like we are in oil seeds, which is absolutely strategic in terms of country's need to minimize the import of edible oil, the oil seeds. We are into wheat and paddy, which are basic staple food for the majority of the teeming millions of the population that we have. So we are into strategic crops. So we are trying to bring about more production to give enough, let's say, bring about food security in the country. So this is what is absolutely strategic. So whatever crops we are in are bound to have tremendous potential for the country, for us. So we are strategically poised in those crops where the need for research and development is there, great, need for productivity increase is very high, and scope of improved productivity also is very high. So in all these crops there is a scope of productivity improvement and value increase for the farmer is also there. So we are strategically placing all the crop, our crop selection is based on the strategic need of the country. Okay, Mr. Singh?
Yes, sir. Understood. Yes, sir. And sir, just another question. So what would be the how is the response for the Python part, sir?
It's picking up. The response is good. Food Park, it is a independent company being managed very well, and the response is picking up now. Post-corona, the response is picking up.
Okay, great, sir. That's it. Thank you so much.
Thank you. Thank you, Mr. Singh. Thank you.
Thank you. Our next question is from the line of Amresh Kumar from Geosphere Capital. Please go ahead.
Hello. Sir, thank you for the opportunity. Sir, I just wanted to understand, since you have to grow your, for the next season now only, so how much have you stocked up for the coming season for your bajra and vegetable crops on a year-on-year basis? Some idea?
You see, what happens is, as far as stocking of H1 is concerned, for next year, cotton production has already taken place. We are expecting around 15 to 20% of growth in cotton next year sales. We need to stock even more than what we expect to grow, for the simple reason because one is to ensure that there is no loss of opportunity, and second is because production cannot be finely tailored to the next year's sales. Okay, the same goes for bajra and jawar and paddy and all that. So basically, the stocking at the end of the year will be sufficient to ensure that the company's guidance for the next year's sales is met, and we still have a little more stock than that, which pertaining to the seed industry we can't help, but we are sufficiently and well stocked.
Got it. So on that count, the provisions that we made for last year, is there any scope for some clawback from those provisions or some write back from those provisions? Is it possible?
We have taken almost all provisions on actuals except for the provision for schemes and credit that is being given to the trade. We continue to push the marketing people to try and reduce it so that my bottom line can improve. Top line will remain the same, of course, in that case. We do always hope and we do push for that because bottom line is my lookout.
Okay. And sir, the mix has changed year on year between cotton, paddy and non and others. So how are you looking at the optimum mix between these three categories going forward?
I said that we had 60-40, or it was 65 and 35 initially, and see that is cotton, paddy put together was around 65% of our top line, and others were around 35%. This was around 2.5 years back. So I had made a public statement at that time saying that we are trying to enhance the focus in other crops, not losing the focus in cotton and paddy. Now that is giving us results, good results. So I think you cannot say there is an optimal mix because it will continue to change. Let us say if Sanket becomes a blockbuster, then I can't say that Sanket ko reduce kar do kyunki mere ko bhindi bechni hai. But let us say 50, 55, 45, 50, 50 in that range. All products, all crops will be given sufficient weightage so that the top line and the bottom lines are maintained. That's my optimal way of doing it.
And sir, another question. For example, how many years does it take for a good or a blockbuster product to be developed from R&D perspective? For example, Sanket, how many years did it take?
Yeah, we got it. Dr. Kulkarni, can you please take on that?
Yeah, it takes around 6 years.
6 years. Okay.
Yes. 6 years to launch the product. Afterwards, to see its growth, it takes another 3 years.
So how many products would be in the pipeline having crossed 2-3 years and you see some good prospects going ahead?
Whether it's an ongoing process. Please understand, R&D always has a line of children which are ready to be launched into the market. Every product has a shelf life, memory life. The farmers tend to become bored by, we want an iPhone every second, third year. So the same happens in field crops also, in vegetable or in seed industry also. The research people have a pipeline of products, then they go for dream products. Let us say cotton has 15 products, they're doing very well, or 5 products doing very well. Out of that also they will select one which is doing very, very well, and something like that. So we always have pipeline products, no issues in that.
And sir, after you launch a good product or blockbuster product, how many years does it take for its full potential to come? Because farmers, they wait for its efficacy. I mean, they look at their neighbors, how they are doing, and only next year they buy the product, for example.
It depends on two things. One is, of course, the product performance, which has to be genuinely exceptional. Then the effort put in by the company to showcase that product to the farming community. Because this is put into the villages, into the fields. So what the marketing people do is they will create road shows, they will take farm melas, they will take farmer melas, and they will bring people from all over and show that look at this product, it is doing very well. So let us say if it is X in year 1, it may become 3X in year 2, and then it may become 10X in year 3, and so on. By about 5 years, people tend to forget, bahut ho gaya, abhi kuch naya do. That's the way life goes.
Okay. Got it, sir. Yeah, that is very helpful. Thank you, sir.
Thank you.
Thank you. Our next question is a follow-up from the line of Guneet Singh from CCIPL. Please go ahead.
Thank you for the opportunity again. My question has been asked by other participants, so thank you.
Thank you, Mr. Singh.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference back to Mr. Devinder Khurana for closing comments.
At the outset, let me thank everybody because I feel quite elated and quite happy with the kind of interest that is being shown in our company by all of you. And I am genuinely grateful that you people are depicting what the company is doing in a genuine fashion. Thank you very much. As regards the company is concerned, I would like to reiterate the fact that we are into seed industry, whether be it hybrid or genetically modified seeds, with a strong research lineup. We continue to remain there, trying to give better and better products every time through research efforts to the farming community at large. That may be called national service, but we always try and ensure that we also get good profit and good margins so that we can continue to pay a good dividend to our investors down the line. With that, I would like to thank everyone once again for all of you being there, and we will see you in the next conference call. Thank you, and thank you very much.
Thank you, members
Thank you.
of management.
Thank you.
Ladies and gentlemen, on behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.